Welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel system for free. All right, let's get started today. If you guys can let me know my audio is working okay, and also be sure to post any questions that you might have. I'd prefer to have all the questions earlier rather than later, because sometimes I get towards the end of the broadcast and then they kind of come in and I'm already kind of winding down. Okay, let's get into what I like to do is get into the earnings edge. Now Will says here, I thought it said 10:45 or 7:45. Yeah, that was an error on my part. I had to switch that over the last 5 minutes. I guess when I set this thing up, I set it up for the wrong time last week. So yeah, 7:15 a.m. Pacific time. All right, so earnings edge. Here's the earnings edge. You can see my screen here. I didn't make any trades on the earnings edge. Nothing fit through the filters. Sometimes the filter, if we're coming down off of high volatility, it's typically a filter that's going to filter out the trades, right? So we're coming down off of high volatility right now. So it's possible that, there's not going to be any trades. I'm going to check again today. I'm going to look in detail. There might be a trade on to put on this week, but there might not, because, what is the VIX today? 25. Yeah, so let's see. The VIX is at 25. So it's getting there, but you're up at 30, 35, 40. I mean, you don't want to get into a trade that's typically long volatility. It's not really super long volatility, but it is a little bit long volatility. So you don't want to be caught in the volatility crush with the earnings edge. So I did not put on a trade last week, but you can see what my net lick is, 12,467. Let's bring over the spreadsheet here. I use a spreadsheet because it's easy to track. Yeah, 12,467. So you can see how the earnings edge is doing. If you go to my equity curve, it actually shows that it's up over 103%. So maybe these numbers are just a little bit off here, but you can see what it did in 2022, 63%, the market was down 20. 2023 did 17%, the market was up 24. In 2024, it was down 33%, the market was up 23, so underperformed there. But so far this year, according to this spreadsheet, up 94%. The market is, well, wow. So last week, SPY was at 515. Let's see what it is now. SPY is at 551.13. So wow, it came up a little bit, came up a lot. Okay, so the market is down about 6% in 2025 so far this year. So that thing recovered quite well. But overall, since the beginning of 2022, the earnings edge is up 149%. Market's only up 16%. Yes. Some guy says here that ADM worked out really good last week for the earnings edge. I did not trade ADM, so yeah, that's what I heard. A lot of this, my students in there made money on that. All right, so that is the earnings edge. Not a lot to report there. Let's talk about the PL5 Pro. Boy, this account has been not doing what I expected, but I'm not going to hide anything. Okay, this account here, interestingly enough, 414,657. Let's put that in there, 414,657. So this one's underperforming. 414,657, down 11.49%, and the market's down 5. So I'm underperforming the market here, but you can see here since inception, the PL5 Pro in last year from July 19th to 2024 did 16%. The market was up 6.65, and so far this year down 11.49. The market's down 5.87. Boy, the market just went up about 5% last week, so it wasn't able to keep up with that. Overall, since inception, my PL5 Pro is up 2.66 and the market's up 0.39. So still outperforming the market overall since inception, but drawing down some more than I expected. I'm going to put out a video on this in the next week or two about why and what I'm doing to update this, because I've got an update on the PL5 Pro. So that is interesting there. But again, you're not going to see me hiding from my drawdowns. All right, I'm not hiding from the drawdowns. They're there. They're a little higher than I expected them to be. They're not outlandish, down 11% when the market was down 17 or 20% at one point. But they are. It is what it is. If you guys have any questions about that, let me know. Okay, so that was the. Let's talk about the PL5. The PL5, okay, not the PL5 Pro, but just the PL5. So on that, I'm using an interactive broker's account. I can't show you the whole screen, because if I do, it'll show my account number. But I have 29,977 in there. 29,977. Because remember, this one tracks. It goes with the S&P 29,977. So with this, I started this on July 16th, 2024, up 10.2% and up 3.94% through 2024. So the PL5 was up 10.2, and then the market was up 3.94. So it outperformed the market by about 6 or 7% in 2024 from July 16th to the end of 2024. In 2025, I'm underperforming minus 9.34. The market's down 5.87. So the market has recovered just like 5 or 6% in the last week. So it's difficult to keep up with that. But the PL5 is basically at break even since inception, and the market's down 2.16%. So still outperforming the market as what I expected with the PL5. So both of my systems are still outperforming the market since their inception, but they're not doing as well as I would like, obviously, but they're still outperforming the market which is that's the thing that really a lot of money managers and hedge fund managers can't do. They cannot outperform the S&P 500, but the PL5 and the PL5 Pro can and are doing that. All right, so that's the PL5. And again, remember the PL5 it's tied to the S&P 500, so it will draw down with the S&P 500. Where the PL5 Pro sometimes will not draw down with the S&P 500, even though it has this particular time, but most of the time it doesn't. All right, let's talk about the safe wheel. Let's see what the account is doing with the safe wheel. Safe wheel's doing very well. Safe wheel's actually making money. So 58.35 is the net lick. Net lick 58.35. That's down $10 from last week. So it really hasn't moved much. So the safe wheel in 2022 outperformed the market by 40%. Then in 2023, it underperformed the market by 20%. Then 2024 underperformed the market by 37%. And now so far outperforming the market in 2025 by about 12%. And if you look from 2022, when I started running the safe wheel in January of 2022, and you compare it to the market, the safe wheel's up 16.7% and the market's up 16.04%. So they're dead even on a nominal basis. But remember, the safe wheel drawdowns are about half the drawdowns of the S&P. So on a risk-adjusted basis, the safe wheel is doing better than the S&P 500. Okay. And now I need to actually make my trades. So, because I'm going to trade the safe wheel. And right here, I'm looking, I own 100 shares. I bought them at 26, or I was assigned at 26. And I have my put hedge. So I have a couple questions with a put hedge to make sure that it's in line. So number one, do I own 200 shares? Because if I do, I could cash the put hedge out, possibly, if it was made more money than the 200 shares had lost, and then use the put hedge. But no, I don't own 200 shares. And then the next question is, have my 100 days are under? And the answer is no, I'm 144 days left. And then the next question is the strike price, this $22 put, within 70% of 24.34? That's what LI is trading, and it is. It's easily within 70% of that. So there's nothing to do with the put hedge. Now I do need to add a long call here that I should have added last Friday, but I didn't get to it. So I'm going to add it now. And then after I do that, I'll run the traditional, I'll run the traditional wheel. We'll see what I do from there. But first, let's put on the long call that I should have put on Friday. It's just a $5 call. Maybe I can get the 27 for $6. Let's see. I'll pay $6. I won't pay $7. And that's probably not going to fill. So I'll go to this one here, to the 27.50. You see the mid price is 3 cents. So I'll pay for that. It's going to expire here at the end of the week, but it just gives me some protection. Let's see here. It didn't fill, so I'll go to 4 cents, $4 for that. And this is going to protect my put hedge. So now my hedge, if something happens with LI and it gets a takeover bid or something that goes from 24 to 50, I'll have this long call here to protect me, because this put will go, you know, it'll be worth nothing at that point. So that's why I have this little $4 long call here. So I'm always hedged all the way through. Okay, so here I am with this position here. My hedges are good. And now I want to run the traditional wheel. And can I sell a call at the 26 strike or higher? And I like to trade, I'm talking about in the near term here. So 26, no, because I want to get at least 24, 25 cents. And I can only get between 11 and 16 cents. So I can't sell a covered call here. So I'm basically stuck. If I was in the traditional wheel, I'd be stuck. But with the safe wheel, I'm not stuck. I'm always collecting ABC. So what am I going to do? I'm going to sell another put. I'm going to also basically kind of like martingale. I'm going to double down. And I'm going to go to an out of the money put. And I want to get at least 24, 25 cents. And I can get that at the 23.50 strike. I can get between 27 cents and 33. But if I can still remain out of the money, I like to come back one and collect a little more premium. So I'm going to sell the 24. I'm just going to do one of those because I have between $5,000 and $10,000. So I'm selling one. I have 3 put hedges, and I'm doing one of these. Now, if I had between $10,000 and $15,000, I would do 2, and I would sell. Then I would run 6 put hedges here, and I would run 2 contracts on the system. But I'm only running 1 contract here. I have a mid price of 46, so let's see if I can collect $46. Of course, I'll get to keep that. Okay, so now I just collected $46 more. I'm always collecting, and that's pretty simple. Just running that wheel. I'll let it run out. I won't look at this account again until Friday when I buy a long call, and then at the end, and then next Monday I'll come in and look at it again. So I really don't pay much attention to this account. I just let it run its course and look at it at the end of the week. Okay, so that is the safe wheel. Let's see if there's any comments or questions here. Will says, I thought it was 10:45. Yeah, sorry about that. My mistake on that. But yeah, 10:15. Kevin says, good morning from Lakeland, Florida. Good morning, Kevin. Some guy says AMD looked okay for the EE last week, and it's worked out. So some people have made money with the earnings edge in the course there, it looks like. I didn't trade it. JNY, underrated channel. Keep up the good work. I appreciate that. And I think the reason why you might say that it's underrated is because I actually share my P&L and actually trade right in front of you. And even if I'm down, I'm going to share it with you. I'm not going to hide anything. But when you find with other channels is they somehow, typically what they'll say at this point is when their systems, if you're trading options right now, you're probably, if you're selling premium right now, you're probably down. Okay, most people, I'd say 99%, 99.9% of people are down. And except for the ones that are in the earnings edge, of course, they're not down. But people that are selling premium, they don't, unfortunately, they're not telling you what their current positions are doing. They're talking about the great opportunity that is here now, rather than focus on what does their actual portfolio look like right now. Isn't that important? Isn't that the most important thing? But they don't talk about how they're doing now. They talk about, wow, this is a great opportunity. Well, that's true. They're correct. There's a great opportunity. but you also have to show what's going on right now. How does your portfolio look right now? But they don't share their portfolio, right? So I think that's the reason why you're saying the channel's underrated. I agree. And if you hit the like button, that'll help the channel grow. So I'd appreciate it if you guys did hit that like button. Simon says AMD. So I'm assuming he traded AMD and made some money. Will, do any of your strategies include straddle or strangle, but with hedges in any way? Yes, the earnings edge. The earnings edge is that. You're talking about the earnings edge right now. Is there any way you can use other popular option strategies and make them safe, like you did with the safe whale? Yeah, I did that with the strangle, with the earnings edge. I wouldn't call it super safe. It just depends on how much money you want to deploy out of your capital. I mean, if you want to deploy 10% of your capital, it's pretty safe. If you want to deploy 100% of your capital, it's you're gonna have some risk, but you're gonna have a heavy reward too. So, but yes, I took some traditional trade structures there with the earnings edge and made them profitable. Some guy says, for the PL5 Pro, if the market now ranges for a few months, won't you struggle to recoup the drawdown? No, that would be good. The sideways markets are very profitable for the PL5 trade structure, and so that would be good for it. The market is recovering really quickly, so it's hard to keep up with the market right now with the PL5 and the PL5 Pro, but no, it won't matter really what the market does from here. I should be recovering. It'll be a slow recovery, and I expect to make money in the next few months, be up, or at least by the end of the year, pretty easily be up by the end of the year, not have a down year, even though I'm down, 11% or whatever it is. I'll recover that. But the market, who knows what the market's going to do? I know what I'm going to do. I know I'm 99% confident I'm going to make money this year, but will the market be up at the end of the year? I don't know. And I don't think anybody knows that. Will says, on top of the 2 PL5s, which do you recommend if you only do one to beat the market? Well, I kind of am leaning towards the earnings edge right now because it's doing very well, because we did an upgrade 3.0, and you can just deploy less capital towards it and it'll be a lot more conservative approach. The safe wheel is okay. You've seen how the safe wheel performs. It's up 16% over a 3-year period or whatever it is. The safe wheel is very, very conservative, and the earnings edge is a little more flashy and can get the returns up there a little faster. So it just depends on what you want to do, and that's how I would recommend. But of the 2 PL5s, which do you recommend? Okay, the PL5 Pro. It depends on how much money. So if you have about $40,000, between $40,000 and $125,000, I would probably run the PL5. But if I have $125,000 or more, I'd run the PL5 Pro. And that's how I trade my money with it. So that's what I would do. So that's probably how I would go about it. It's not probably, it is how I'm going about it. Will, would you recommend a straddle or strangle strategy for lower level trader, traditional trader, looking to capitalize on potential large price swings of the SPY ETF over the next month? Well, the VIX is a little higher, it's around 25, so that's all kind of priced into those options, right? So if you try to buy a strangle, the prices are the expected move, and a little more, not just the expected move, but the expected move plus more premium is priced into the options. That's why selling premium has an edge. And I wouldn't I don't think there's an edge in buying options unless you do it in an exact certain way where you can we can get those options at a discount. If you can't get the options at a discount, you can't figure out a way to get the options at a discount and still get all the upside, I wouldn't buy options. So don't forget, typically when you buy options at a discount, you don't get all the upside, or you're limiting your upside. But with the earnings edge, we don't limit our upside, and we're able to get them at a discount. So that's the only way I'm going to buy options, is if I can get them at a discount. Simon, I guess at Simon. Oh, okay, you're talking to Simon, yeah. And Avery says she forgot about the long call last Friday. Yes, I asked her to buy the long call last Friday. And she says hit the like button. And Avery says I'm going in on EE this week. So I might not do an EE trade, but Avery says she's going to commit to an EE trade. And I'm sure a lot of the students are going to. They did last week. J&Y says, do you expect the PL5 Pro goes up the next weeks, even if there's another sell-off in the market? I do. I do expect it to go up, even if there's another sell-off. This is more. Somehow I'm on a different aligned price of 24.50. I think you're referring to LI. And I can sell a covered call at the 25 strike. Yeah. So if you got assigned at 24.50 here rather than $26, you're going to be able to sell a covered call here rather than adding to the position. Casa de la Vida says, I had 200 shares and today the put hedge has paid off. So I sold the whole position, but it didn't open a new position because LI is 24 and it won't pass through filter number 1. So yeah, there's other, let's see what's out here. The other stock I like to trade is DKNG. So I might go to that one. That's a good idea to go to that one, DKNG. I've been oscillating back and forth between DKNG and LI for a while. Look at Kohl's. It's only worth $6.88. Okay. As I look at this watch list, I don't really look over it very often. It's interesting how much these stocks move. I think I had Palantir on here too. Look at Palantir, $112. So this used to be a $30 stock because whatever was in here was close to $30. So wow. I don't really watch stocks very often from that point of view like most people do. Some guy says, Avery, AMT question mark. Also looking at a few others where the RC is not perfect, but they do perform on back tests. So an RC, I'm assuming you mean some type of filter. It may or may not fit through all of the filters, but sometimes you go ahead and go in there anyways, which is fine. I typically don't do it that way, but that's okay. Will says, I know one of the answers for if the P&L is not real, what else are you trying to conceal? Well, their edge is probably not real as well. Exactly. If their edge was real, I would think that they would share their P&L. What do they have to hide? Why not share the P&L? What's the reason behind that? I ask you guys to go into the comment sections of YouTubers that are selling courses on trading, and to ask them. Don't ask them, will you share your P&L? Don't say that. Say, do you believe instructors should share their P&L? Do you believe instructors in general should share their P&L? Ask that question, see what they have to say. Because if you ask them if they could share their P&L, they're going to have some excuse. Well, my accountant told me, or my lawyer said I couldn't do it, according to the FTC rules, or some thing that they make up. So don't ask them specifically. Just ask if they believe in general, whether they believe that instructors should share their P&L, their net liquidation. Okay. All right. Well, I appreciate you guys. And one thing I like to say in parting is, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and we'll see you then.